Right. You can see the screen. Financial report. This is very important. Your income statement or the profit and loss statement or the balance sheet and the cash flow statement. All engineers should have a very good idea about these things, because the to get an idea about the progress of your uh, section or the company, this will give a very good visibility for these things. Therefore, you should be able to analyze these statements and get the idea. This is not only financial, the people's matter, because as engineers, you should have the knowledge of this also. So I have some links to internet sites. I will share this one. Uh, right. Income statement or the profit and loss statement. So an income statement, financial statement that shows you the company's income and expenditure. This will give the your income and expenditure only. So the you have you from this one you can get an idea whether you have the very good income and what is your expenditure, whether you have a profit in your company. So this is the importance of income statement, and income statement help business owner decide whether they can generate profit by increasing revenues, by increasing costs, or both. It also shows the effectiveness of the strategies that the business set the beginning of a financial report. The following are few other things that can income statement inform. Frequent reports, pinpointed expenses, overall analysis of the company. Then this income statement should be used by the uh, engineers and the finance people also. Then the income statement, you can have the cost of goods sold, gross profit, gains. So these things, then you can have the advertising expenses, administrative expenses, depreciation. I think that you should have idea about what is depreciation and what is amortization also. So when you purchase something, its value will be depreciated annually. So normally the computers we give 5 years. So that means each year 20% depreciation is there. So depreciation is considered as a loss or expenditure in your this profit and loss statement. Then the tax should come. Then you can see the net income. So this is a example of the income statement or the profit and loss statement. uh, Merchandise sales, revenue from training. Then this is the, you have the revenue part separately. You have the expenses part, procurement cost, wages, these things are there. Then uh, then you can see whether finally you have a profit or loss. So the in a company's income statement is more than this. So the finally you can get whether it is you have a profit or loss from the company. Okay. Next thing is the now sometimes the this profit and loss statement shows you have a profit. Now points to the but it doesn't make sure that the you already got the money. So this is one drawback of the statement, I think, because you can see profit, but maybe the money is not with you. So therefore, that part you can check from your balance sheet. You can go to the balance sheet and get the idea. There even it shows the how much you spend for the business and how much you have assets now, and then whether the whole business is profitable or not so far. Now, income statement or the profit and loss statement gives an idea for a particular period, maybe 1 month, 3 months, 6 months, or 1 year. But the balance sheet shows the the status of the whole company from the beginning. How much they have invested, how much they have got the loans, how much money should be received. Although this profit and loss statement says that this is the income that should be received, still not the money received. That is reflected in the balance sheet. So I will share the balance sheet with you now. The balance sheet. Okay, this is now I am sharing balance sheet. So this is a balance sheet. Balance sheet. A balance sheet is a financial statement that contains details of a company's assets or liabilities. You can see that the profit and loss one is for a particular period. It doesn't uh, indicate the how much money you invested to the company and how much assets you have, how much liabilities are there. So this one gives that picture to you. So this is a example of the balance sheet. Uh, it is one of the three core finance. The balance sheet serves as a reference document for investors and other stakeholders to get an idea of the financial health of an organization. So the whole organization find how much they invested, whether the return is there. It enables them to compare current assets and the liabilities and determine the business liquidity or calculate the rate of which the company generates returns. Now, this example of balance sheet. These are the parts in the balance sheet. What are the assets and what are the liabilities? Now here you can see the under the liabilities, accounts payable. So this thing is not reflecting in the your income statement. How much money you have to payable, and we can see the account receivable. This money we have received to the company. Then the current assets. Then how much investment we have there done. Property, plant and equipment, land, buildings, equipment, those things. Then the intangible assets. Then the total, how much is here on the asset side. In the liabilities, the current liabilities, then the long-term liabilities, and the owner's equity. So this is there we are balancing these two. So because your total assets and the total liabilities should be equal. To make it equal, this part is you are using that is called the equity. So this is you can some idea about the balance sheet now. Now the next problem is even you have a profit in the company as per the profit and loss statement, and as per the balance sheet you have the your company is very good, you have the profits in your company, it is running very well, but sometimes you don't have the cash in your hand. It may be in a different way. So if the cash is not there, you cannot pay the salaries to your employees. Maybe your third party, the outsourced companies, you cannot pay money because if the cash is not there. So therefore, the next important statement is the cash flow statement. So I will share that one now. The cash flow statement. What is a cash flow statement? A cash flow statement is an important tool used to manage finances by tracking the cash flow for an organization. That means the actual money is in your books or the bank. The statement is one of the three key reports in the income statement balance sheet that help in determining a company's performance. It is usually helpful for making cash forecasts to enable short-term planning. So, importance of a cash flow statement. For business to be successful, it should always have sufficient cash. This because always you need some cash. This enable it to pay back bank loans, buy commodities, invest to get profitable returns. The business declared bankrupt if it does not have enough cash to pay its debts. Here are some of the benefits of a cash flow statement. So they give details about spending, helps maintain optimum cash balance, help you focus on generating cash, useful for short-term planning. So format of a is the format of the cash flow statement. So how much cash you have in your company, net earning, depreciation, and the cash flow, equipment. So this will give you the visibility about your company's cash flow.